Hey, everybody. Before we dive into today's episode of the AgView Pitch, I want to invite you to check out our exclusive podcast, 19 Minutes. For just $30 a month, you'll have access to high-level business insights and new episodes that are released on the 9th, the 19th, and the 29th of each month. Topics include finance, cost of production, team health, taxes, collaboration, and much more. With 77 episodes already available, signing up gives you immediate access to all past and future content. Click on the link in the show notes and subscribe and start boosting your bottom line today. Welcome, everybody, to another episode of the AgView Pitch. We're heading into a new marketing week, February 3rd through the 7th. The first week of February, the price discovery period. It's going to be interesting and exciting. So how's it going today, Chad? We got Chad Hart
Oh,
from Iowa State.
it's going fairly well. Hey, let's face it, it's been beautiful across the state of Iowa the last few days. Upcoming weekend, supposed to be mid 40s, mid 50s. It seems like March.
Yeah, yeah. Well, we'll take it, right? We'll take whatever we can get that's on the positive side here for sure.
Yep.
So you've been out and about on the speaking circuit all over the place. The first thing I want to ask you is tell me a little bit about where farmers' heads are at. What are they thinking? Where are they at right now with regard to sentiment on the markets and the outlook?
Well, that's the. I think as we look at across the crops, you can definitely see more, let's call it optimism about corn than with some of the other crops, which sort of aligns with what USDA is projecting as we look out into 2025, but also just the way the markets have developed over the past few months.
Hmm.
So that we are seeing more interest to talk about, what does it look like if we plant some more corn this coming spring, and what are the opportunities to not only grow more corn, but where will we go with all that corn that we might produce? And so, like I say, a lot of positive sentiment around corn. Beans has been more of a struggle for folks to look at.
Hmm.
I think a lot of the concern there has to deal with the main customer we have for our beans with China and concerns that that could get messy as we, move forward with President Trump's agenda, especially when it comes to tariffs and
Hmm.
how other countries are likely to reciprocate and target agriculture.
Hmm. Um, when you said more corn, let's talk acres for a minute. We're seeing that with our clients. I mean, in fact, we had our conference a week ago in Florida for our AgView Executive Business Conference, and one of the slides I had put together was just based off of the shift that we've seen, which was, I think, I don't have it right in front of me. I think it's like 5.3% shift to more corn and about the same away from soybeans, even a little bit more away from soybeans because of, cotton and some other external crops outside of the main part of the corn belt. But it's a pretty huge shift. I mean, there's enough of a shift, and I doubt it's going to be that big. I think that's more of our clients. I mean, if the whole industry shifted, say 2 or 3%, you're probably talking 95 plus million acres, aren't you? And what's your thought there? I mean, can we hit that big of a number, do you think?
We can, but yeah, I'll agree. I think that's a little bit beyond
Mm-hmm.
where we're at right now. Now, as USDA looked forward, and again, USDA puts their first numbers together basically back in October of last year when they're looking to 2025. And they basically had 92 million acres going to corn, 85 million acres going to beans. So that would be up 1.4 million acres for corn, down 2.1 million acres for soybeans. So, they were showing smaller movements, but
Mm-hmm.
again, more corn, less beans. My own sense and traveling around, talking to farmers, and as I like to say, watching what we did this fall, you could tell a lot of farmers were prepping more ground for corn.
Mm-hmm.
We put more fertilizer out there. We definitely did some more, as I like to call it, sometimes recreational tillage out there in preparation for corn.
Mm-hmm.
So you could see those movements. As I've been talking with seed companies, yep, they saw seed sales going up on the corn side. So I'm more in the camp of say 93 to 94 million acres out there. I think we can each reach that fairly easily. The 85 on the soybeans, though, we might hold there. I think the thing that soybeans has going for it right now is that especially as we look sort of north and west of us here in Iowa, as you look towards the Dakotas, Minnesota, Nebraska. They've added some soybean crushing facility in these areas that's going to help hold probably more bean land in production than we would have seen in the past. When you build
Hmm.
that local usage, it tends to help hold acreage a bit better.
Hmm. Interesting. That's an interesting comment. I guess I want to shift back away from the acres for a minute, and we'll get back into the 25 crop. But I want to back up a minute on the 24 crop and the recent rally that we've seen. We're recording this on Friday for release on Sunday, and we've seen, as we go into this new week here now, and we look at at how Friday closed. Coming, I mean, we're still have a pretty big rally going, and it probably hasn't violated anything. We're probably still in an uptrend and that type of thing. So, talk a little bit about the sentiment again, or are you seeing any frustration of people? Well, damn, I sold, in the, at harvest time, and I sold, maybe I sold too much, or do you think people are taking advantage of this rally on the bushels that yet were unsold, and recognizing it's a blessing? Where are people's heads at on this rally?
I think it's more the latter. It's a blessing, or as I've described it, we got a late Christmas present.
Mm-hmm.
But I'm going to point out that this Christmas present was building since harvest.
Mm-hmm.
If I look back at sort of how the season price estimates for corn have been moving over the past 3 months, it's been slowly working its way up over time. And
Mm-hmm.
it's a combination of, in this case, this last leg in it, the last couple of weeks, we got the assistance of the corn crop was a bit smaller than we thought it was originally. And so that gave the market some room for growth. But I'd argue the biggest thing is when you look at the usage side, when you look at the demand side of the market,
Mm-hmm.
what we've got right now is pretty darn strong feed demand, basically record ethanol demand as we're looking out there, and a resurgence in what we're seeing in exports. And it's that export surge that really has been helping push the corn market higher, but it also is what makes it susceptible as we look forward and why, especially this week, you could see that the market is ready to turn around if they feel the tariffs are really going to dig in to some of those trade partners we've been working with and trying to develop over the past couple of decades.
Mm-hmm. So I have a question too on basis. We've seen a lot of the rally taken away on the basis front in some areas, much more than other areas too. Kind of depends on um, sort of what the conditions were, how much was sold, what the demand looks like locally, and that type of thing. Any comments on basis and managing that, because it definitely in some areas really took away almost 75% of the of the gain, and we're still, we have an increase in price, but it's not as much as I think some people thought it might be.
It did at the same time too. It's probably not going to make a lot of people happy. Because I'm going to frame it this way. When you think about what our basis is doing, it's adjusting back down to normal. In fact, I'm sort of going over this with my students in my class this week, looking at how basis moved for Iowa corn this past year.
Mm-hmm.
And, for half the year or more, we had positive basis across Iowa, which is not the usual, is not the
Right.
average.
Right.
We saw, we were seeing better than normal basis. Now, for the most part, as I look across the state, we're back to where we sort of usually are. So we've lost the benefit of, sort of those, let's call it, near positive basis or at par
Mm-hmm.
that we usually get when we are a bit dry like we are. The drought does have some impact. Um, yeah, the market was giving that up as the futures were rallying up here. So yeah, we don't enjoy as much of a movement on the cash side.
Mm-hmm.
But that's likely played mostly out by now. So now that we've got basis back down to normal, I don't expect that necessarily to continue. So
Mm-hmm.
if we've got an additional leg to this rally, I would expect more of that to transfer through to the cash price than what we've seen up to this point.
Mm-hmm. Sounds good. So, I guess one of the other things I wanted to hit on with you is we are heading into the price discovery period. Um, I mean, we might end up with, if we did continue in this rally a little bit, might end up with a pretty decent spring price on the insurance. Is there anything that you would recommend people be thinking about as they start looking at their insurance programs and managing that risk and that in that realm? Any comments there as we head into this price discovery period?
Well, as we sit here right now, I'd argue right now we're seeing prices in line with what we saw last year.
Mm-hmm.
So it's likely in this case that, our premiums would be roughly the same. We're not seeing any sort of sticker shock going on there when it comes to on the corn side.
Mm-hmm.
Beans, you're going to see a lower price right now, or probably about a buck lower when it comes to
Yeah.
projections for what we'll see for that crop insurance price. But that will also translate into a lower premium as we look forward this year. And I would argue what that should do for folks, though, is give them more opportunity to look to see if you're not at those upper levels within the insurance, maybe you should be. This is a time of year where I'm going to say, if I'm going to, if I'm going to buy up, maybe in a down year like this, it makes more sense to buy up because I can do it more inexpensively than I can any other time.
Mm-hmm.
And given that we've got a lot of volatility in the market, buying up, especially on the revenue products, makes a lot of sense to me as we're moving forward in 2025.
So are you thinking like the ECO as an example, as an opportunity to really, elevate that level of coverage, even though it's county, but it really takes you up to a whole nother level. And with the increased um, coverage there from the government, I think it's to your point. I would agree wholeheartedly. Any other comments on that? And is it ECO you're thinking?
Well, it's both, I would say, within RP.
Okay.
Let's say
Yep.
if you're at 75 or 80, maybe look for 80 to 85. But yeah, looking at SCO, if I'm going to sign up for PLC, putting SCO on top, whether I pick ARC or PLC in the farm programs, ECO is that option that, yeah, as you say, plays up there in those shallow losses. And one of the changes for this year that should make ECO even more attractive is the government has increased the subsidy on ECO this year.
Mm-hmm.
So it makes it even um, less expensive to buy now.
Mm-hmm.
So I think if I remember right, the subsidy last year was 44%. I think it's going up to 65%.
Mm-hmm.
And so that's a product that I think is well priced for farmers to take advantage of and offers them this, I call it shallow loss coverage, because basically with ECO, you're only facing a 5% deductible when it comes to county level revenues. And that's a pretty small deductible to look at,
Right.
especially given the swings we've seen in the markets over the past 5 years. So it's an insurance that will likely provide some payments as
Mm-hmm.
we look at, even a normal year going on within the marketplace.
Mm-hmm. Yeah, I wholeheartedly agree. I think this is going to be one of those years when, the margins are tight and these insurance programs really do bring a ton of value and really put a floor in, that's going to make you be able to continue on. Um, I guess what I want to do next is just talk a little bit about new crop sales. We talked a little bit about the 24 and the rally. We haven't seen 24 come along as much. And obviously, the beans, at least from what we see, we're still a buck away from the break evens. When we figure return to management in our system, it's paying yourself, it's paying your employees, it's turning the lights on, it's all these other categories, right? And so we're quite a ways away yet on soybeans, but on corn, we're getting there. I mean, we're like at cost of production, including paying yourself and stuff. So, what makes Chad comfortable with your farmer hat on in terms of percent sold, or what kind of range, should maybe guys be considering and thinking about, if we get to that level, and every farm's different, but if we get to that level where we're like covering all those costs, paying ourselves as part of the cost of production, any thoughts on that, comments?
Well, I sort of agree with that sentiment. When I look at corn, I see some opportunities to price and price effectively where we are covering those costs. Where beans, no, I agree, we're not there yet for the 2025 crop.
Mm-hmm.
And so for corn, I think for the folks that want to go ahead and start layering in, it does make sense. And I'm sitting here going, it's still, 3 months before we'll get planting, but this is still an opportune time. Anytime we can lock in a little profitability is a good time to be in the market. On the case of soybeans, though, I'm going to say, yeah, I understand waiting. We're just not there. And, I'll say this for corn as well. I still believe that we'll see that typical seasonal rally that we tend to see in the, spring and early summer. So I don't want to get too aggressive this early. For
Mm,
beans, I'm going to say not get aggressive at all and sort of wait to see how that seasonal rally develops in hopes that it puts us closer to a break even here.
mm,
And I would say the same thing on the corn. I want to be a little aggressive right now, but I don't necessarily want to be out there thinking I want to have this entire crop sold before I hit the fields this spring.
mm-hmm. Interesting. I think, what you're saying says a lot is in terms of being optimistic on this, but I also would want to question you on the idea of, putting some targets out there and just having these offers in incrementally. Is there any advice or anything there when people are putting in um, those targets for sales so that, because it seems like, and I say this like a broken record, but, it seems like the best time to sell is at, middle of the night when you're
Yeah.
sleeping and you got 5 seconds to make the sale, and that's when you should have made the sale. So putting those targets in, any recommendations on that as far as, you know, segments or percentages or any thoughts there at all?
Well, that's I tend to think of it as, yeah, segments. And I don't know if it's a set percentage, but what are you comfortable moving it at any one given time?
Mm-hmm.
And so sort of sitting there going, is it, 5, 10, 15, 20,000 bushels? But layering it in, like saying, okay, if I could get, say my break even is 460 today, just to pick a number out of a hat. Layering, maybe making an initial sale at 460, maybe going a dime up, going 470 with a level, 480, 490. Some people do it by quarters.
Mm-hmm.
It always makes sense to have those offers in place. Think about the price targets that are meaningful for your farm, that cover the cost, that help build the farm up to where you want to go. And then have, let's call it, you want to have those pragmatic targets, so making sure you cover those costs, but then have some what I'll call aspirational targets, layering them up. Because if the market goes up there, you've already got those offers standing in there ready to go, and they may take off at any time. In
Mm-hmm.
fact, actually, this earlier this week, I had a grain merchandiser from one of the local elevators come talk to my student club. And he was talking about how, his job can shift very quickly from basically nothing moving to everything moving. And a couple of weeks ago, that's what happened when USDA's final crop report came out. He said he went from zero orders on the board to suddenly there were 500 of those offers that had been sitting there that all triggered at the same time.
Mm-hmm.
So it helped, pull in, a lot of corn, but it's the idea of having those offers ready to move.
Mm-hmm.
And like I say, it's not that you don't have to wait for the rally. You're sitting there putting these are the targets I want to hit, having that offer standing at wherever you market. And that way, if it does come in the middle of the night, you can take advantage of that opportunity without necessarily having to be watching the market and sitting there going, I have to pull the trigger now. You've already done that
Mm-hmm.
through providing that offer.
Mm-hmm. Awesome. Okay, so the last question I have for you is kind of a there's a couple of pieces in it. So we've got the funds, and they've been interesting. It seems like they totally switched from where they were last summer, completely on the other side on average or whatever, and then and then we've got the demand issue, and we've got a lot of potential acres coming our way. So, what are the segments that you're watching the most carefully? And for the farmers listening, what do they need to be paying the most close attention to? Of all the fundamentals and some of these technicals at the same time, what are some of the key things to watch just to pay attention to?
Well, like I say, for me, I'm watching weekly export sales right now. looking at not only how big those sales are, but if you will, who is truly participating in the market right now.
Hmm.
So the reason I'm watching that is due to, the concern about the tariffs, but it's also looking to say, okay, the tariffs may be hitting a couple of the customers, but if they're not hitting the ones that are in the market right now, they do less damage. You want to watch to see. I mean, not all tariffs are equal in this case. And I'm watching exports because that's where the growth has mainly been for both the corn and soybean markets over the past, especially 6 months. Beyond that, you mentioned the funds looking in here. Yeah, they switched from short to long. They definitely, they're still staring at a lot of the countries are still under drought conditions. That could have an impact here. So another thing I'm watching is to see, okay, does that activity within the fund sector change, especially as we look at the potential of changing weather conditions as we move throughout, especially this next month coming up. I know in talking with some of the meteorologists, over the past month or so, they're saying that, February is going to be different than what we're seeing here in January. The idea of that this bright blue sky that I'm seeing right now may come with a little more moisture with it next month, which would actually be welcomed
Good to
right
hear.
now. I think there's a lot of concern about productive capability as we're moving forward. We are dry. At the same time, too, I remind folks that we've been dry most of the past 4 or 5 years and yet have produced some of the best crops we've ever seen in our lives.
Hmm.
So, it's basically watching to see where will the volatility strike next.
Hmm.
Um, and like, as I look out over the next couple of months, I would argue it's on the trade side first, probably weather would be second after that.
Yeah. Interesting. I appreciate that. I think that's important. I mean, we got a lot of stuff to watch and pay attention to, and then I think at the same time when we talked about putting those offers out, and I like your idea of segmenting them up quite a ways too, because typically what we see when there are not offers out there, I always call it price resistance or price increase resistance, where a grower will sell 10%, and then they'll sell 5%, another segment higher yet, they sell 1%, and then they're paralyzed and
Yeah.
nothing is sold above that. So I love the idea of doing those aspirational sales. That's a really good comment there, is making sure we have those targets up there. So
I
awesome.
always in class talk about the greed. I call it the greed, fear, and ego cycle.
Yeah.
And you're right. The idea is in a rising market, we almost hate to pull the trigger because we're like, no, it's going to go higher. But the problem is we never know where the peak is.
Right.
If we did, we wouldn't be sitting here talking about
Yeah.
it today. We would have
Yeah.
a drink in our hand and we're down at some, island we own.
Yeah.
So people always miss the peak, and then we can't sell in a down market because we're waiting for it to rally back up again. So yeah, having these offers in place and it creates some discipline in your marketing. So as you say, you're not always thinking about what could be. It's more, what is this sale doing for me in my farm? And what it's usually doing if you set that offer in place
Yeah.
is that this is a good financial sale for your farm. You're making money, you're growing the size of your farm because that was a great sale.
Yeah. That's awesome. I think that's a great place to wrap it up. Discipline and having those targets out there is going to be a huge key. So we're going to get you back again here once we get towards the end of February, if you're willing to come back, and we'll be a lot smarter in terms of where that risk management number is at, and we'll be able to look at that across some of the crops and have some more discussion. But really appreciate you being here today.
My pleasure to be with you.
All right. Again, Chad Hart, Iowa State University. Appreciate it. Appreciate everybody else being on here too. And we will catch you again next time on the Energy Pitch.